Today, I want to talk about how the AMC lawsuit is about to expose just how committed the shorts are to delaying the split, with the introduction of a $100 million bond. I also want to talk about the massive increase in capital requirements that's about to take effect, and how, as a result, another US bank has just been bailed out. So stay tuned, and let's make some money. Now I'll dive straight in with the key information. So, Alexander tweeted saying per new court documents, Rose Izzo can become the head of the lawsuit and delay the lawsuit all she wants. The only problem, which is her problem, is that she will need a small loan or a small bond of about $100 million as a down payment for the losses AMC may incur. As AMC is saying, any further delay to the lawsuit costs AMC about $100 million per quarter, making Rose Izzo responsible for 100% of that loss. Saying that if a stay were to be granted, Miss Izzo would be required to post a meaningful bond. Saying a petitioner seeking a stay of an order pending appeal must first provide sufficient security in the form of a Super D's bond in an amount determined by the court. And saying the court does not have discretion to waive the security requirement altogether. Basically saying the primary purpose of the bond is to protect the appealee from losing the benefit of the judgment through the delay imposed by a stay. And AMC has calculated the potential damages to AMC based on previous share issues over the last few years, saying the damages AMC would occur if the court were to stay its judgment pending appeal would be well over $100 million per quarter. Now, I think this is going to expose just how committed the shorts are to really delay the AMC lawsuit. For example, if the shorts are 100% committed and they need the lawsuit to be delayed to save their own skin, I'm sure Miss Izzo can easily come up with this $100 million bond. The shorts have already funded this Allegheny lawsuit with hundreds of thousands of dollars, if not millions of dollars in legal fees, when Allegheny only holds a few $1,000s worth of shares. You'll remember I showed an invoice of court fees in one of my previous videos where already over $500,000 in fees has been racked up in legal fees alone. So obviously the shorts are clearly bankrolling this lawsuit, but just how deep do these shorts' pockets run? And not only how deep do their pockets run, because we know their pockets are fairly infinite, but how committed are they really to delaying this lawsuit? Is it life or death for them? Are they willing to spend $100 million a quarter just to try and delay this lawsuit further, or is the game up? So I think this is going to end in one of two ways. Either the lawsuit disappears and Ape converts in the next 2 or 3 weeks, or the shorts magically find $100 million to continue delaying this lawsuit. I also wanted to show you this very interesting video of an ex-banker that used to work for big banks in the US saying a massive transfer of wealth will happen in the next 2 months. This is effectively what we've been saying all along. There's going to be this massive transfer of wealth where the market crashes, AMC and GameStop and other meme stocks squeeze, and we see hedge fund managers end up going bankrupt. And this guy is saying that wealth transfer is likely to happen potentially in the next couple of weeks, but he believes at least before September, October time.
We could possibly hit the point of the wealth transfer beginning this month. I realize there's only 11 days left. That's not a lot of time. But at the movement that this is moving in terms of activity and what's being exposed, things could move very rapidly. And there could be during that time, even appointments being made and transactions being done very quietly in the background. This will be all with heavy NDAs. No one's supposed to talk about their transactions, talk about where they get their money or anything like this. It's going to take some time to work through that. I think between now and let's say into September, maybe late September, so the next 2 months plus, we could be seeing those things take place in the background. I think by the time we get into late September, it's going to be publicly in the face of everyone. Hey, there's a financial change occurring here. I hate putting dates to anything, and you know, I want to just put a window out there. It is a 2023 thing, and this is all subject to change at any given day. So, you know, if it doesn't happen tomorrow, well, don't freak out. It is unfolding. And it will happen.
Also, you can currently get a guaranteed free share of Tesla, a cash reward, and 15 free shares, which you could always use to buy more shares of AMC, GameStop, or a vape. All you have to do is sign up to Moomoo using the link in the description below and make the required qualifying temporary deposit. Moomoo is free, it just requires a temporary deposit, and it's a really great way to help support me and to help support the channel. But on top of that, Moomoo is also very easy to use. They've got tons of technical indicators and even have their own options trading platform. There's also this article that talks about the US Federal Reserve confirming July 27th meeting on Basel III, which is the endgame capital proposals for banks. And this is because top US bank regulators unveiled plans for their most comprehensive overhaul in capital rules in years, forcing large lenders, aka large banks, to thicken their financial cushions to absorb unexpected losses. The measures released Thursday by the Federal Reserve, Federal Deposit Insurance Corporation or FDIC, and the Office of the Comptroller of the Currency would boost the amount of capital that banks with at least $100 billion in assets must hold by an estimated 16%. And the 8 largest banks, including JPMorgan Chase and Bank of America, face about a 19% increase, with some smaller lenders between $100 billion and $250 billion in assets seeing as little as 5% more. Now this is really interesting because it means some of these major banks like JPMorgan Chase and Bank of America that are bankrolling market makers like Citadel all of a sudden have to hold on to way more capital. That means they also have to issue margin calls way sooner as well. You may remember those calculations I showed you yesterday, where because Citadel uses a 7-to-1 leverage ratio, Citadel has $50 billion of equity and is borrowing $200 billion from Bank of America. And I said that when Citadel loses that $50 billion, they should be margin called. Maybe Bank of America is giving them some leeway, allowing them to lose $60 or $70 billion, potentially creating a $20 billion loss for Bank of America if and when Citadel collapse. But obviously, if all of a sudden Bank of America has to hang on to 20% more capital, that means instead of allowing Citadel to lose the full 50 out of 50 billion, they may only allow them to lose 40 out of 50 billion before issuing that margin call. And if they've already lost over $40 billion, they may end up receiving an instantaneous margin call when these new capital requirements are implemented. And obviously, if Citadel cannot meet these new Basel III capital requirements or capital proposals, it will quite literally be their endgame, which would obviously very much cause a massive wealth transfer. And speaking of which, Zero Hedge has also tweeted about the latest US bank that has just collapsed. You may remember a few days ago, I think I actually mentioned it in one of my videos, but PacWest Bancorp had just reached a deal to sell the bank to Banc of California. On top of that, JPMorgan is also buying almost $2 billion of mortgages in that PacWest deal. Now, the reason why PacWest Bancorp is selling itself to Banc of California for rock bottom prices is because PacWest Bancorp is either collapsing or is about to collapse in likely a week or two. Obviously, full details of the deal haven't yet been announced, but don't forget PacWest Bancorp stock is currently at multi-year lows. Earlier this year, pre-banking crisis, PacWest Bancorp was trading at $30 per share. Right now, today, it's only trading below $10. And obviously, I'm sure when details of this deal are announced, PacWest Bancorp will likely be sold for $5 per share, maybe $4 per share, maybe even less. And it also seems that Banc of California doesn't have the cash or maybe doesn't have the financial stability to also take on these toxic mortgages from PacWest Bancorp. And therefore, JPMorgan is obviously having to effectively chip in and buy up $2 billion of toxic mortgages, likely for rock bottom prices. So again, that's just another US bank that has collapsed or is going to collapse in the next week or so and has to broker a deal at rock bottom prices. You may say, Tom, PacWest Bancorp hasn't officially collapsed. They're just selling their business. And I would say, yep, that is exactly what Bear Stearns did back in 2008. Even though Bear Stearns didn't technically collapse, they were obviously sold to JPMorgan Chase for $2 per share. It's pretty much a collapse. And I do think PacWest Bancorp is just going to be one in a potentially long line of regional banks that will likely be sold for rock bottom prices over the next few weeks and few months. Especially as the Fed has just increased the federal funds rate by another 25 basis points, effectively making lives even worse for these regional and even major banks. And to top it all off, AMC is still on the threshold securities list. Obviously, I haven't spoken about this much in my recent videos, but I think today is a special day. You may remember AMC most recently started its run on the threshold securities list on the 26th of June. That basically means that today, or effectively as of yesterday evening, AMC had officially spent one full month on the threshold securities list. I wonder how long AMC will stay on this threshold securities list for this time round, whether it will somehow magically disappear in the next few days or next few weeks, or if the SEC will somehow magically take action. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.